All right, got a real brief little exercise that we're going to do here on common size income statements. I've worked through a handful of the answers myself, just to kind of show you how I came up with the figures. And so when we talk about common size income statements, you might notice that oftentimes when you're dealing with a company, depending on the size of it, we'll see something like this, indicating that sales revenue, for example, is not 71,879, but this figure is in millions. And so if an even larger company might use billions. A company that's a little bit smaller might use thousands, and then a smaller company still would just use literally $71,879. So if we were to think about this, and we were to add 6 zeros to sales here, we would have the actual figure for sales for Target Corporation, and quite honestly, I'm surprised it's not a little higher than that. And so we convert it to this 71,879, and then that actually would allow us to compare, if we wanted to, Target Corporation to a business that literally, again, had $71,879 in revenue. And then we can say, okay, we can do what's called a horizontal analysis, where we plot the numbers of one company here and another, and so we go back and forth horizontally. But before we do that, we have to make some calculations vertically. And so when we're looking at an item like sales, when we're looking at the income statement, our baseline figure is going to be sales revenue. So in our case, we're using the figure 71,879, and all we really have to do here is say, okay, well, what percentage of sales revenue is sales revenue? Well, you can see I've got the answer is 100%, and that makes sense. However, when we get down, on some of these other items, we might also be curious. They're calling this cost of sales. You might, depending on what level you're at, you might have heard simply the term cost of goods sold. That's perfectly fine. There's when we say cost of sales, we're being a little bit fancier. We're getting a few more numbers involved. But notice I've calculated that one as 71.1%, and all I did to do that was take 51,125 as my numerator and divide by my base, 71,879, for my using that as the denominator, and we come up with 71.1% rounded to one place. Okay. So again, there's a lot of extra. If you're familiar with cost of goods sold, this is not exactly the same thing, but for our purposes, it'll be close enough. And so when we compare the cost of sales to sales revenue, this is what we call vertical analysis, because we're going up and down. If we were to plot another company over here and look at their cost of sales versus this 71%, then we would be doing horizontal analysis. So notice we've got, let's see here, we've got selling, general, and administrative expenses of 14,248. So I put that into the calculator already, and I divided by the same 71,879. And it came up with 19.8%. The only other number that I calculated was net earnings or loss, and so to get that, we're going to need this figure right here of 2934. and divide that by the same, let's see here, what was it? Now let me pull it back down so you can see it. Divide by 71,879. In other words, it's always going to be sales. Always going to be this figure. And we come up with rounded 4.1% right here. Okay, so now you have an idea how to do that. I will say one thing. One of the items that they do not have here is we can also calculate, gross profit. And gross profit is not here, but we could put it here by simply taking 100.0 or we could, let's change that around. Let's say 1 for 100% minus 0.711, that's 71.1% in decimal form. And we could say, okay, our gross profit is 28.9%. If we had a big change from year to year in sales revenue, and then we had some changes in cost of sales, that is of course going to impact our gross profit. And these are little things that we can look at to glean information. Okay, so again, we're going vertically using sales revenue, the figure here, as the denominator, and then all of these individual items here as our numerator, and we're just going to go straight down the line. If we wanted to compare two different periods, we would have to we'd have to do the same thing vertically, say right here, and then compare horizontally side by side. But not a lot to it. And there's a fly in here that's driving me nuts, so I'm going to end this video.